Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 26th of February 2020. And yesterday evening we published a video entitled Equities, Oil and Gold and Silver Fall Update. And on Monday, stock markets fall, gold and silver rise. Is the grey swan turning black? Where we warn listeners to expect further falls in the equity market, and that although there may be a recovery of sorts, it's too early to tell at this stage the extent of the effects on global trade the recent coronavirus outbreak has actually caused. We also published this morning an update on the current situation on our Richard and Greg YouTube channel. Now, yesterday we reported that stocks fell heavily yet again, and in a moment we shall take a look at what is happening today. What we reported this morning and yesterday evening was that both gold and silver were in fact down, though gold has recovered $1 in the last 24 hours and stands at $1,645, having been as high as $1,654 and as low as $1,625 today, but was as high as $1,689 on Monday. So it's about $54 lower currently than Monday's high. Silver in the last 24 hours is down some 22 cents and is currently standing at $17.98, though it has been as low as $17.80 today and as high as $18.27, and was just shy of $19 on Monday at $18.95. So it's down some 97 cents since its Monday's high. Now, before we look at the current situation right up to the last minute concerning the equity markets, let's take a look at two Bloomberg articles published literally within the last hour or so. Bloomberg article dated February 26th, 2020 at 6:40 p.m. GMT. Headline: Stocks erase gains with virus concerns lingering. Markets wrap. US equities erased gains as investors digested fresh evidence of the widening coronavirus outbreak. The dollar advanced. The S&P 500 dipped after reports said officials in the New York region are monitoring people for exposure. The benchmark index had slid more than 6% over the prior 2 days. 10-year Treasury yields approached the record low close set Tuesday. European shares pared losses to close mostly higher, while Asian equities finished in the red. Oil bounced around $50 a barrel and gold edged higher. Quote, "The market is pricing in the unknown extent to which we'll see a pullback in growth and in turn what this will mean for corporate earnings," unquote. Mike Levengaert, Vice President of Investment Strategy at E-Trade Financial, said in an interview at Bloomberg's New York headquarters. President Donald Trump and federal health officials plan to brief the United States public Wednesday on efforts to prevent the spread of the coronavirus. Diageo plc and Danone SA warned earlier that the outbreak will hit sales in China. The first cases in Greece and in South America emerged, while Spain locked down a seaside resort hotel with about 1,000 guests and workers inside. Risk assets are struggling to rebound as coronavirus cases steadily climb outside the epicenter in China. South Korea said its national total rose to more than 1,000, while American health officials on Tuesday warned that they expect the epidemic to spread in the United States. Traders may be looking out for further signs of policy accommodation after American central bankers said they are closely monitoring the spreading, though it's still too soon to say whether it will change the outlook. Quote, "People are taking a step back and reviewing the data and seeing how much this coronavirus is progressing," unquote, said Michael Reynolds, Investment Strategy Officer at Glenmead Trust Co. End of article. Bloomberg article, dated February 26, 2020, 4:58 p.m. GMT. Headline: UBS tells rich clients to buy dip in China's stocks hurt by virus. The spreading coronavirus epidemic is spooking investors out of equities, but UBS Global Wealth Management is advising its high net worth clients to use this as an opportunity to load up on Chinese shares. Quote, "We think investors should be buying the dip in emerging market stocks, and especially or specifically Chinese stocks," unquote. Maximilian Kunkel, Chief Investment Officer for Germany at the Swiss wealth management firm, said in a phone interview, quote, "You have a more attractive valuation and growth mix here, and also China seems to be containing the virus and getting back to business," unquote. Equities around the world slumped this week as Italy, Iran, South Korea and Brazil confirmed new infections, while the United States warned Americans to prepare for a potential coronavirus outbreak at home. At the same time, the World Health Organization said China's unprecedented lockdown and restrictions blunted the epidemic's spread and led to a decline in new cases. Chinese equities have had a volatile start to 2020. The Shanghai Composite Index plunged after the reopening of the market following the Lunar New Year. It rebounded by as much as 11% from a low in February before trimming its gains this week. The rally was partly fueled by expectations that Beijing's monetary easing and fiscal support measures would help companies weather economic headwinds. China's stocks look particularly attractive compared to the euro area ones, said UBS's Kunkel, because of Europe's muted economic and earnings growth outlooks. The European benchmark stock 600 traded at a record high just last week, before falling the most since 2016 this week, as the number of coronavirus cases surged in Italy and Spanish authorities sealed off a Canary Island hotel. Quote, "We would caution investors against buying into the dip in the Eurozone until there's more certainty, and until we reach a peak in the daily number of new infections," unquote, said Kunkel. While businesses in China are restarting and the official data show the rise in infections slowing, the virus is not yet overcome. 5 of the 8 economic indicators tracked by Bloomberg dropped in February from January, with 2 gauges of business confidence plunging to the lowest on record. The Shanghai Composite fell for the 3rd day on Wednesday, set for a 1.7% drop this week. But unlike European and US equities, the Chinese benchmark wasn't even close to an historic high this year. The Shanghai Equity Index trades at about 11 times estimated earnings, compared to about 14 for the Stock 600 and 18 times for the S&P 500. End of article. Okay, so far the Dow is down again by 100 points at 26,981, and the S&P 500 is down 10 points at 3,117. The FTSE, the UK FTSE index, is up 24 points at 7,042, and the Euro Stoxx 50 is up 5 points at 3,577. All of the main Asia-Pacific markets are down, anything from 0.73% to minus 2.3%. Interestingly, the dollar index is up at 99.1. Now, what is interesting from the articles, and we should seriously note this, and that is that whereas we would all like gold and silver to be the obvious destination for investors' funds in this crisis, and there has indeed been some movement towards precious metals without a doubt, we must also not forget that fund managers and high net worth clients are still likely to be focusing on bargain equities. And at the moment, China's stocks could indeed be worthy of that focus. Now, let us be clear. We personally would not touch them with a barge pole at present, as the risk is still too high, and especially if other equity markets suffer a further fall. But we understand the logic. This is why, to some extent, we haven't seen vast sums move into gold or silver, which such a crisis would normally herald. The dollar is certainly benefiting for the moment, and to date, bonds have also tended to do well. And investors could indeed be going liquid with a view to reinvesting in the markets in relatively short order. This cannot be ruled out. Now, we are of the opinion that whilst there should be no need for panic, this situation is by no means over, and we are currently buying small amounts of gold ourselves on dips. Not silver as yet, as we currently still see the value in gold. Silver will have its day, but not yet. You see, we now have a gold to silver ratio of 91.5. If you remember, about 6 to 7 weeks ago, we said to expect this ratio to hit 90 to 1 and then go even higher. And this is exactly what is happening. It's now 91.5 to 1. The industrial demand for silver is falling, or at least the fear of it is falling. And that's what investors believe. And this is bound to create a divergence between the two precious metals, even when both of them rise. When that divergence is at its greatest, and the outcome of this recent black swan is known, then silver may represent tremendous value. But for now, our money is going into and staying in gold. We were going to cover another issue today, but this is a rapidly moving situation, and we are expecting high gold and silver prices, especially if the virus spreads throughout the United States. It is a big if, but a distinct possibility. Even then, we are not alarmist. For as controversially Greg frequently says, quote, hope for the best and prepare for the worst, unquote. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. Press the bell sign so that you are notified of our videos as and when they are published. And we have provided links to our Richard and Greg channel below. For those interested in what's happening in Trump world, to our Trump for President 2020 channel, although that needs to be updated further with what's been happening in India, and that will happen within the next day or so. And we've provided some links both in the description box and in the comment section for those looking for added protection against this virus. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.